my chips. I'm getting rich. Running up digits, counting up six. My money flipping, let's take a trip. Splash. Standing on business, tycoon rich. I'm rich. Look at my chips. I'm getting rich. Running up digits, counting up six. My money flipping, let's take a trip. Splash. Standing on business, tycoon rich.
All right, great morning, everybody. Happy Tuesday. We're here again trying to see if we can find some more opportunities in the market. Now, before we get started, I always like to explain what we are trading. Then we're going to talk about how we trade it, and then we're going to probably try to slide a lesson in there before the market opens. Okay, so every morning in the academy we trade NASDAQ at we start at 8:45 a.m. I do it publicly here on YouTube just to kind of share some information with everybody else, but this is what we do it on a day-to-day basis. Okay, so with NASDAQ, it's an index that caters to investors interested in innovative growth-oriented companies like Apple, Microsoft, Amazon, and others, offering a diverse selection of industry leaders, driving economic progress and technological advancement. And so these are some of the companies that are comprised within the NASDAQ index. So you all might be familiar with Monster. We already mentioned Microsoft, Adobe, Ross Stores, Paychex, Cintas, okay, Intel, all right, Apple, we mentioned that one, Comcast. Okay, so a lot of well-known companies that you all are familiar with, we trade the overall performance of this index. Now, in order to trade the performance of the index, you gotta have to know, number one, what you're trading, but also how to trade it. So before we get into how to actually trade it, and we go over this on a week-to-week basis. So if you want to circle back and look at some of the other live sessions, feel free to do so and check that out. But we're going to talk about knowing your trading personality. That's really, really important when it comes to trading. Because at the end of the day, I could be, and I always use basketball as an example, just because, like I said, that was a major part of my life, right? But let's just say you're putting a player that should be a point guard in a post position. Well, that point guard is not going to do that well. If you put a post player in a point guard position, they're not going to do that well. So when you understand your trading personality, you understand your strengths and weaknesses when it comes to trading. You understand your skill set. You understand your way of viewing the market. Okay? And when you have this identified, this will allow you to be even more successful. Okay? This will allow you to be even more successful. So let's go to the first one. All right, let's talk about the first one. So the first one it talks about is position trading. Okay? So position trading essentially means that you enter a certain position and you take profits based on recent pivots, but you're taking multiple, you're putting yourself in position to take multiple profits from the market. Okay? So, for example, if your maximum risk for the day is $500, okay, that's your maximum risk, $500. So if you can risk $500 and you're a positional trader, and let's say you want to put in 2 positions, okay, for the trade. So that means each position, the risk should be $250. Okay, $250. And this is applied to any level, right? So if you're risking 5,000, then each position should be 200, should be 2,500. Okay. So let's envision, let's say that you're in a sale here, right? This is our 200, this is our 20 that crossover. We know our strategy when it comes to crossover, right? But let's just say you got a crossover. You put your stop loss here. So you have one stop loss at 250 and you have another stop loss at 250. Okay? So you have one at 250, the other at 250. So altogether, you're still risking 500, but you're splitting up the risk to possibly give you more opportunity for profit. Okay? So you enter here, okay, and let's say the trade moves in your favor. All right? So you took profit on take profit 1, you took profit, and now you made $250. Okay? You made $250. Now, once this profit has been obtained, okay, you then move, because now this stop loss is gone, okay, because you already made 250. So that means one position is no longer in the equation anymore. Okay, take profit 1 is gone, okay, because it already took its profit. So now we have one more stop loss left, okay. This stop loss at this point, once it takes profit, should be moved to break even. Okay, move to break even. And it should be moved to break even because you don't want to risk giving up the profit that you've already made for profits that's just basically icing on the cake. But let's say price continues to move down in your favor if you were in a sell. Well, now take profit 2, you put yourself in position where you can make, let's just say $500 because price continued to move down. So you made $500 from this move. So altogether, you made $750 from this move, okay? And your total risk was $500, okay? So this is scenario 1 with position trader, okay? Are you the trader where you saying, all right, I'm gonna take my profit, but when that market continues to move, or if that market continues to move, how do I feel by not being able to take advantage of that? Am I like, it doesn't matter, I got my money, I'm out? Cool, that's fine. We have a specific type of trading for that we'll get into. Or are you more so like, okay, I took my profit, but dang, I wanted to get more out of it because the market continued to move. And if that's how you feel when you look at trades, then you're probably a position trader. Okay, you're probably a position trader. All right. So that's position trader. Now, let's look at trend trading. Okay. So again, you still have 2 positions, but now your take profit distance is a little bit further because you feel like, based on the way the market is setting up, that we're on a nice trend. And so instead of me just getting a 1-1 here, I might be able to get a 1-3 or a 1-4, depending on how long the market trends. Okay? And so when we look at this scenario here, we'll run the same situation. So you're at 500 here for your risk. Okay? And so remember, guys, this is option 1. This is option 2. And great morning to everybody that has joined, guys. Great morning. Okay? Appreciate y'all for locking in. Happy new day, Mary. Always a pleasure. Always a pleasure. All right? So here we are. So you put up $500. Okay, same scenario. All right. And with this $500, again, we're risking 250. Okay, on these positions for the trend. So you got 250 here, you got 250 here. Okay, so you enter here, and let's say you enter to buy. So we got 2 entries here. Okay, And this first entry here, you took profit. So this position is out of the question now. So you only have one stop loss. So you made $250 on this one position. Okay, that's at the recent swing of the move. Okay, but the market is trending. So the market is doing something like this. It's creating higher highs, right, and higher lows. All right, and you see the pattern. And so you exited off your first position here, but you thinking, okay, this thing might go up a lot more because it looks like we're on a nice trend. So you set your take profit up here somewhere. So it's like a 1-to-3. Let's just say that, a 1-to-3 ratio. Okay. So you set your take profit for the second take profit for 1-to-3. So now that you see that, here's your take profit too. Okay. And let's say the market moves in your favor. Okay. Market moves in your favor. And now you've capitalized not $750, but now $1,000 off of this move. Actually, if it's 1-to-3, yeah, you capitalize $1,000 off of this move because you risked $250. Okay, so you just pulled from this move $1,250 in profit. Okay, $1,250 in profit. All right. Now, how do you know if you're a trend trader? So you risked $500, but you pulled $1,250. Okay. How do you know if you're a trend trader? Well, trend traders, unlike the position traders, they'll put in 2 positions, but that second position, they don't mind holding. That hold might be for a day, might be for 2 or 3 days, could be for a week, but they don't mind holding that second position to get as much as they can from the move. They see the trend, or they're looking for trends, and they want to hold that position to fully maximize from that trading opportunity. Versus with a position trader, they're saying, okay, I'm going to take my profit, and then if it moves a little bit more, then I'll take a little bit more, but I don't want to hold. I don't want to hold overnight. I don't want to hold for a couple of days. I don't want to hold for a week. All right. And so trend trading, also known as swing trading, right? That's what you're looking at for that. Okay. So we have our position traders, we have our trend traders, and now let's look at our scalp traders. Okay, our scalp traders. Our scalp traders, very straight to the point. Okay, they want to kind of play around with it. They want to get their money, take their profit, and look for the next opportunity. All right. They feel like all the time that I waited for one trade, I could have been capitalizing from a lot of other trades. Okay, so that's your trend trader. I'm sorry, your scalping trader. Okay, so let's go into detail of what that looks like. So with your scalping trader, okay, you're gonna see something like this, where your stop loss is here. Here's your stop loss. Now, instead of you risking 250, you just took one position at 500. Okay, so you don't need 2 positions for a scalp trader because you're in and out of your position. You're not looking for the market to move up. You're just trying to get in and out. So you can maximize this position as much as you want. So if your maximum daily loss is 1%, you can risk the 1% on that trade. Now, also keep in mind, it depends on how many attempts you want to trade that day. So if you want to trade, at least get in 3 trades that day, understand that you need to be risking about, let's just say 0.35 or 0.33 per trade, right? Because if you risk the whole 1%, well, now you're in position to, you're basically going past your risk management, right? With the 0.33, it gives you opportunity to still win a couple of more trades, right? So just keep that in mind. But we'll use 1% for this example. Okay. And the reason why I broke it down like that, because 0.33, that gives you 3 attempts to get in the market. Right? So if you lose the first one, you still got 66.66% you can play around with. And you win the last 2, and that puts you where you need to be. That puts you in profit. Okay? So $500 is your risk. Here's your entry. Here's your take profit. Next swing. Boom. Price doesn't need to move a lot for the scalp. You take your profit, you're out. Okay? You take your profit, you're out. Now, with scalping, it is very... So you made your $500. Let's just put that there. Okay? With scalping, understand that you cannot interfere with your position. So if you enter here, let's say that this is your entry. Let's say you set your take profit up here for a buy. And let's say your stop loss is down here. Once you enter this trade, if you're taking profit here, you're not doing it right, because you're not letting your trade fully play out. Okay, so instead of you getting $500 from that, right, you're now getting maybe $75. So when you lose a trade, now you lost 500 and you only gained 75. So now your account is going the opposite way, because you're not letting that full position maximize to take profit here. Okay? So that's extremely important when it comes to scalping. So I have a question for everybody that's viewing. Okay? Everybody that's viewing, we have, let me see. If you're able to, okay, let me know which type of trader you are. Okay, so we'll do this. We have option 1 for position trader, option 2 for our trend trader, and then we have option 3 for our scalper. So put the number in the chat. Are you number 1, the position trader? Are you number 2, the trend trader? Or are you number 3, the scalp trader? All right, put your number in the chat. Are you number 1, 2, or 3? 1, 2, or 3. Let me know in the chat what type of trader you are. 1, 2, or 3. And also keep in mind, guys, this can change. As your trading journey matures, and as your trading journey changes, this can change. Okay? We got Mary. She says she's a scalper. Mike says number 3. Okay, number 3. So we got a couple of scalpers online. We got a couple of other people that's online with me. Let me know what type of trader you are. Are you a number 1? Are you number 2? Are you number 3? Let me know in the chat, in the YouTube chat. Let me know what you guys are. Okay? Let me know. So I think, okay, so in the other chat, let me see. Kelly said 1 and 2. All right, Kelly, I need you to pick one. I need you to pick one. Which one? 1 or 2? Let me know. Or are you saying 1 and 2 for you and Sylvester? Which one is it? Let me know. Let me know. And so number 3, the scalping piece, very, very popular trading personality here. A lot of people like to get in and out of their trades. They don't like to have to sit and wait. They don't want to have to come back and watch to see if it's doing good, or go through the emotional roller coaster of seeing the market kind of go down and then come back up, and go down and come back up. So that's the difference there. So Kelly says she's a number 2. Interesting. Okay. Very interesting. Number 2. All right. So Kelly, when you're taking your positions, you definitely want to take two positions when you get into your trades. Very cool. Very cool. All right. Great job, everybody. So we have identified our trading personality. Now that's when you formulate a risk management process around it. Okay. So every day you should have a daily goal. If you don't know what your daily goal is every day when you're trading, You're just trading aimlessly. Okay? You're trading aimlessly. So for some people, that might be, okay, Troy said he's a scalper as well. Okay, we got a lot of scalpers, but we got one trend trader. Okay, I love it. I love it. And this what makes trading so significant is because there's so many different personalities and outlooks to how to actually look at the market. Okay, but let's go to this. So when you all are trading, you have to have, you have to have a daily goal, guys. You have to have a daily goal. Okay, what is your daily goal? And then also, what is your daily stopping point? Okay, what is your daily stopping point? That's important too. All right, so when you're looking at that, let me kind of make this a little smaller. When you're looking at your daily goal, typically 0.5% to 1% is a pretty safe place to be for risk management. So if you're averaging, let's just say 1% a day, that's 5% a week. That's 20% per month. That's a great return for Forex / future trading. Okay. So daily goal. What is your daily goal? 1% is more on the aggressive side. 0.5% is more on the conservative / moderate side. What would be most comfortable for you all? So let's say, for instance, you guys, and you have to look at this from a whole perspective. This isn't just from how much you can make, but also how much are you willing to lose? What type of loss can you stomach? All right. And I know you guys don't like to lose. None of us do, right? But the reality of it is it's a part of the process and we can't avoid it. Okay. So for your daily goal, let's say you have your $200,000 account. Okay. Because that's what we're working towards. $200,000 account. All right. And with your $200,000 account at 1%, you're losing about $2,000. If you looked at your account and you saw you lost $2,000 in about 5 to 10 minutes, or for however long that you're in that position, are you okay with that? And if you're not, then you're not a 1%. You don't want to risk 1%. Okay? Now, if you are okay with that, then by all means, you can take the risk. Okay? So it really just depends on your personality. So let's just say you are okay with 1%. In this case here, you have two positions, $1,000 for one position, $1,000 for the other position. Okay? Same thing for the trend trader, 1,000, 1,000. For the scalping, the whole position is $2,000. The whole position is $2,000. So let's say you're not okay with that. Go down to 0.5%. Okay, 0.5%. So in this case here, now we're talking about $1,000 that you're risking for your trade. Okay, so you're talking about $1,000 instead of $2,000. All right, so now you come here, and so now we say $1,000. All right, so now when you're breaking this position up, now you're at 500. And notice how all of this is tied into your risk management. You have to know what type of trader you are so you can know how to trade it. Okay? Stop loss for the scalper will be a whole 1,000. And that's if you want to just take one position. Remember, if you want to take multiple positions throughout the day. So for example, with a scalper real quick. If you know you have a day where you can kind of put in more trades, don't put all your eggs in one basket. If you know that you're going to be busy and you can just kind of set one trade and you got to let it go, then go ahead and you can risk your maximum amount. Okay? So it's all about understanding your circumstances too. Okay? So 200,000. So let's just look at this. You hit 0.5% a day off a $200,000 account for 5 days. That's $5,000 if you're risking 0.5%. Okay. Now it doesn't always play out like that. You might be at 3,500, maybe 2,500. But let's just say 5,000 for example purposes, right? If you were risking at 1%, right, at $2,000, now you're at 10 grand, 10K in a week. Okay, so this is why we have to master knowing what type of trader you are, how to risk these trades, right, when you're in these trades, so that you can continue to build your account and then feel comfortable to eventually trade this live $200,000 account. Okay, because this is the ultimate goal here. Because if you're a moderate / conservative trader, even at 0.5% a day, you're still looking at a 20K month. Okay, and if you're a more aggressive trader, you want to risk 1% in a day. Well, now you're looking at a 40K month. And this is all attainable putting up minimal risk. If you're in the academy, you know what minimal risk I'm talking about. You know what minimal risk I'm talking about. Okay, I can't give y'all everything on YouTube, right? That's what the academy is for. But you have to know your daily goal, right? And your daily stopping point. So here's our daily stop. Here's our daily goal here. Okay, so I'll just put DG for daily goal, and then we have DS for daily stopping point. Okay, so your daily goal is to make 2K. Your daily stopping point, if I reach 2K, I have to stop trading. When you have this in mind, you know exactly what you're trading for. You know exactly how to obtain the trades. So we have this strategy. We go over the strategy every week, right? We have this strategy, but you also need to have the risk management piece in place, because that's just as important. So Mary says, I feel this is a part of being a newbie. The daily goal is a part that's going to get me to the next level. Absolutely, Mary, and I will give yourself a little bit more credit than that. I don't think you're that much of a newbie, but it's also, like you said, it's definitely going to take you to the next level, because now you have a structured plan on how to build that account. If you're just saying, oh, I won one today, or oh, I won two today, or I lost one today, you have to know your numbers. So for those of you all who met one-on-one, we probably went over metrics, right? You have to know your numbers. You have to know, okay, this is where I can improve, right? Maybe I need to risk a little bit more, or maybe I need to take more trades, or maybe, I might be risking too much. It really just depends on where you are. And so if you're a scalper and you're only, reaching, let's just say you're a scalper and you're only risking like 0.1% of your account, well, that's going to be a tough journey, because you're not going to get to where you need to be, and it'll become frustrating. So with a scalping, you got to be a little bit more aggressive. Also understand that with scalping, you got to be a little bit more aggressive, because you're taking a lot from a little bit, right? You're taking a lot of profit out of a small move. Okay, but if you're a trend trader, well, now you can kind of breathe a little bit, right? You take your profit from the first position, but you can get more out of it because you're letting it sit. All right, Sylvester said, after I reached 2,000, I approved this message. I felt like I just read a commercial, Sylvester. I love it. I love it. So it has to be clear and concise. So in training this Friday, everybody that's in the academy, we're going to really, really dial in on the risk management piece, on what you should be looking for every day based on your trading personality, and how we can continue to execute. All right, and then we're gonna break down that BPC to the fullest. Okay, and we're gonna stick to our directional bias for that BPC. So speaking of which, let's go to the chart and let's talk about what's going on in the market today. All right, I felt like this was very important to share today, so I wanted to cover this, because this is a huge piece. We go over the trading psychology, we go over the strategy, but the risk management is just as important as all of those other things. All right, so let's get into our chart here, and let's see what NAS is doing today. Okay, let me share my screen here. Let's move you over. All right, awesome. Okay. All right, so what we're looking at right here for, let's see, where are we? Okay, what we're looking at here is our NAS, right, on the 15-minute chart. All right, and I'm going to provide a breakdown for this, for all of the Academy traders. I'm going to provide a breakdown because last week we went over the crossover and I dropped that into the chat. So this week we're going to really break down this BPC again so that we're fully clear on what we're looking at. So the first thing that we are looking for when we are looking on how to trade NAS is the directional bias. In the comment section, let me know, what is our directional bias for today? Are we looking for buys or are we looking for sales when it comes to NAS? What is our directional bias? Buys or sales? What is our directional bias, guys? Let me know in the comment section. Are we looking for buys or sales today based on our directional bias? And if you're new here, welcome. I'm going to explain this in a minute, but I always like to kind of ask those questions just to see where people's headspace is so we can make sure that we're looking at this correctly. All right. But based on the chart, what are we looking at? Okay, are we looking at for the directional bias? What are we looking at? Let's see here. All right, so we have, let's see, I think, okay, so Mary said buys. Yes, this is great information, Coach. Thanks for your dedication. Absolutely. Absolutely. Troy says a buy. All right. Absolutely. You guys are 100% correct. 100% correct. So that means we should only be looking for opportunities to buy. We should only be looking for opportunities to buy. So how do we know where to buy and when to buy? How do we know where to buy? Great job, Mike. Mike said a buy as well. Where to buy and when to buy. Okay? How do we know that? So let's go look at the chart. So let me, I feel like this is kind of, yeah, I'm going to take this one out here. Let me see. It's a small little level. I guess we can keep it. All right, so let's look at this here. So the reason why the students said that our directional bias is a buy, because they were looking at our trading GPS. Our trading GPS in this case here is our 200 EMA. Let me see if I can get my pen to work if it wants to. Our 200 EMA. EMA is exponential moving average. The 200 just means the average moving candles for the past, oh, there it is. Okay. The average moving candles for the past 200 candles. Okay. So this blue line right here, this blue line is our 200 EMA. Okay. If we look at the trajectory of the 200 EMA, we can see that this blue line is moving up. That's the first thing. The second thing, this white line right here, this is our 20 EMA. Okay, so for those of you all who have been tuned in, the 20 EMA, okay, 20 EMA is one of our indicators of how to get in. But for the market open, we're not looking for the crossover. So I'm going to say this again, guys. Market open, we do not look for the crossover. Market open, we look for BPC. We still use a 200 as our guide, no matter which way we're trading. Okay. That 200 is always our GPS. Okay. So we use it as our guide. So the 20 is above the 200. So that's also another indicator that we should be looking for buys. Okay. Another indicator that we should be looking for buys. So we determine why we're looking for a buy. Let's determine where we should be looking for a buy. Okay. So we know why, but let's determine where we should be looking for our buy. Okay. So let's look into where we should be looking for our buy. Let me see if my pen wants to cooperate. All right, so where? So I'm actually going to tighten up this key level here. I think this is I think we'll be okay past this key level here. Oh, I got my pen. I'm like, why is it not? All right, hold on a second, guys. Okay, so we're going to take it out and we're going to slide this one up here. Here we are. All right. This is the first thing you're going to see, where is recent price? Where is current price? Current price is this dotted line right here. This candle right here that's moving. This is current candle. This is current price. Okay. When I look at the current price, I want to identify the most recent support and resistance level based on where price is. Here's my support. Here's my resistance. Okay. Remember, with support and resistance, okay, resistance is what? Our ceiling. Support is our floor. All right. So if I throw the ball to the ceiling, okay, the natural reaction is for it to bounce down. Now I'm going to explain the significance of this, okay? But if I throw the ball to the floor, okay, if I throw the ball to the floor, the natural reaction is for price to what? Bounce up. Okay? So, now that I know that, and I have a clear understanding of that, if we know that when you throw the ball to the ceiling, the natural reaction is for it to bounce down, then that tells us we have a strong ceiling or we have a strong level of resistance, right? But with the BPC, what typically happens is, and the B stands for breakthrough. Okay, that stands for breakthrough. All right, I should have probably typed this, but we'll just bear with me, right? So I'll put breakthrough. All right, so I'll just put this here. So, and I'm trying to write on the computer, so bear with me, y'all. All right, so breakthrough. Okay, so we have our breakthrough. All right, where price breaks out of our ceiling. This is for a bullish BPC because with bullish BPCs, we're looking for buys. Bullish means buyers. Bearish means sellers. Okay? Price breaks through the ceiling of our resistance. So that means this ceiling is not that strong anymore because it's not what? Pushing price back down to the downside. Okay? So we just got a breakthrough. So that means something else is happening now. Now that we have a breakthrough. Okay? So there's our breakthrough. The second thing we're looking for is a pullback. Okay, we're looking for that pullback. All right, so we're looking for the pullback to pull back to what? The key level that was once resistance. All right, the pullback is very significant because it helps you to avoid, not all the time, but a great amount of time, to avoid fake breakouts. Because sometimes what will happen is price will break out here and then come right back down. So that's a fake breakout. Okay, breakout is supposed to continue to the upside for a bullish BPC. Okay, so we get our pullback and it stays at or near our key level that was once resistance, and then we get our continuation. So this is where we should be looking for our buy. Okay. Now, when do we look for our buy? When we look for our buy is when that continuation candle breaks past our pullback level. We know that there's a high chance that the buyers now have control of the market to at least push price up to the next level. At least push price up to the next level. Okay? So that's a BPC. So that C stands for continuation. I'll just put CONT right here because we don't want to draw this out. Okay? So continuation. All right? So that's BPC. Now, once you're in your position, right? Where do we look? First of all, what time frame do we look for our BPC? We look for our BPC. We look for the structure on the 15-minute. We look for structure and directional bias on the 15-minute. We look for entry on the 1-minute. We look for entry on the 1-minute. The reason why we look for entry on the 1-minute is because price moves fast sometimes when the market opens. So you can get a quick BPC into here instead of waiting for price to fully leave you and go the other way. Okay? So we look for a BPC on the 1-minute. Where do we set? How do we know where to set our stop loss and take profit? We do that based on the 5-minute. So risk management is 5 minutes. Structure and directional bias is 15 minutes. And then entry is 1 minute. Entry is 1 minute. Stop loss, take profit, 5 minute. Structure, directional bias is the 15-minute. Okay? That's the breakdown. That's the breakdown. So you'll see me navigate through different time frames once we are in a trade. Okay? You'll see me navigate through different time frames once we're in a trade. All right? So that's the breakdown of the BPC. The BPC is the most relevant. You can use this through regular trading as well, but for the market open specifically, the BPC is powerful. Okay, when you have that correct directional bias and you waiting on that buy and you get your BPC confirmation, high chance it will convert into a winning trade. Not all the time, but there's a high chance it can convert into a winning trade. All right, so we have a minute and 35 seconds until the market opens. We are looking for a BPC at our resistance level right here. Okay, at our resistance level, that's the 23,289 level. All right, support. Now, let's say price continues to come down here, and we get some support here off of the 200. Okay, then we can pretty much look for a buy also somewhere in this area here. Okay, so I'll talk about that if we come down here because that's a little bit more advanced for this piece right here. But the BPC is right here. This is what we're looking for. Okay, so that's where we are. So we have 45 seconds, guys. 45 seconds until the market open. Normally, I would ask, do you guys think we're going to get into a buy or sell? But you guys answered the directional bias correctly today. Even though you can still say you think a sell is going to happen, right? But based on what we're looking at, that's where we are. Okay? That's where we are. So let's go to, let's see here. Let's go to our chart. Let's zoom in a little bit. 10 seconds. And let's see what type of opportunities we have for today, guys. Remember our strategy as far as risk management. If you're a scalper and you feel like this is the only trade you're taking today, you can go ahead and risk that 1%. If you want to take multiple trades, then break it down to either 0.5 or 0.33% for your trade. Okay? Here we go. The market is officially open. So what I'm waiting for is for price to approach this level here. If we get close to this level, I navigate to the 1 minute so I can see what's happening. Okay, I navigate to the 1 minute so I can see what's happening. Also for this key level as well. Okay, now our 200, excuse me, is right here. Our 200 is right here. Okay, and I put this here so I can be fully aware of where our 200 is on the lower time frame, so that there's no type of premature entries based on that, because we know the 200 serves as a strong level of support or resistance, just depending on the direction when you're in the market. Okay, so let's just see what opportunities we have. We're going to be patient and we're going to wait to see what happens today. And so normally I'm on here till about 10 o'clock to see if we can find an entry, and hopefully we can do that. Now also keep in mind, at 10 a.m. today we do have news. Okay, we do have news. So our news for today, really quickly, is the ISM Services PMI. Okay, and then President Trump, he spoke at 8 o'clock. That was an orange folder. But at 10 a.m. we had the ISM Services PMI. So just if you want to know what that means, that's a level of diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. So based on the performance of that, we should see a reflection in the market. Okay, so let's go back to our chart. All right, at this key level here, it looks like it's trying to find support here. All right, if it breaks through here, I'm going to go navigate to the 1 minute so I can see what type of patterns that's going on here as far as the candles is concerned. Okay, looks like my USD CAD took an L, but that's all right, y'all. Oh wait, no it didn't. No, it closed. I think it did. I don't know. I'll check it out later. All right, so let's see here. Let's see what we have for today. Let's see. Okay, and let's see. We have NAS finding support here. Yeah, it did take a loss. The USD CAD. It's all good. That's a part of the process. I took a W here from this buy here, right? Got in here and took a buy up here, so that's all good. All right, so we got 11 minutes and 55 seconds. All right, and right now price is kind of battling here at this 23,190 level. When I see a wick like this, that's telling me that the buyers are finding support here. Remember, think of the analogy. Remember, we said this earlier. This is our floor, okay? And so when price comes down here to the floor and it starts to move up, that means we probably have a strong level of support if it stays like that. But we still got a lot of time left, so we can't make any assessments based on that. All right, so we're just waiting. Let's see what opportunities were presented for today. Okay, what opportunities are we presented for today? Here we go. We have 10 minutes left on this 15-minute candle. Let's go to the 1 minute and see what's happening. The buyers are definitely trying to creep in here at this level, though, for sure. All right, a little bit of support here. Okay, if we get a W structure, then I definitely feel like this is a strong level of support. So W structure, meaning a double bottom. Okay, so we come here down, we go up, we come back down. It finds support again. So it already found support once, but it finds support again, and then we push to the upside. Okay, so that's another possible scenario there. All right, but let's just see. Or price could just continue to break through and come down to the downside. All right, so let's just see where our opportunities are for today. All right. All right, so that was a pretty strong candle. Let's see if the buyers have enough strength to hold price at this level, though. Let's see if they have strength to hold price at this level. So we got about 45 seconds left on this candle, so it's still early on. So let's see if let's see what happens. Let's see what happens. All right, 35 seconds. Here we go. All right, buyers are coming in strong here. Very interesting. Let's see if it can hold, though. We always wait until the candle closes. We never look at what it's doing right now. We look at what it's doing once it's closed. Because you can start off really well in one direction and then end up in a totally different direction when it closes. Like, that's a lot of wick on that candle right there for a candle that came out so strong like that. So that's something we have to be cautious of, okay? But let's see what we get. Let's see. See if we can hold some support here. All right, here we go. Here we go. All right, buyers trying to hold a little bit. Buyers trying to hold just a little bit here. Here we go. Here we go. 20 seconds left on this candle here. Looks like we are finding support after all. All right, so if I go to the higher time frames, let's see what's happening and how structure looks on the higher time frames. That's definitely a W now. All right, so look how on the 5-minute, this candle broke the 200 on the 5-minute, right? But it's finding support as well right here off of the 200. So if you guys remember, with the Keltner, we're not fully there on the 15-minute, but with the Keltner, when price comes out and that 200 is going up, that's a good entry. Okay? But how do we know when to enter or if to enter? Okay, how do we know that? Let's see. Let's go to our 15-minute. So notice how our 15-minute candle is still in play here, right? It's still a wick here off of the 15-minute. Wow, look at that. Incredible. The buyers are really coming in strong now. Let's go to the 1-minute. They're coming in extremely strong right now. All right, so we know our point of entry, y'all, is here. This is our point of entry, is up here. Okay, anything in between is a bit risky. Technically, yes, this is a good Keltner entry off of the 5-minute, but we're going to wait for our BPC. Wow, look at that. 1 minute and 25 seconds left on this 5-minute candle. I'll be honest with you all, I am kind of tempted to get in just because I'm seeing how it's reacting off the 200 here. And we did come outside of the Keltner. This is a major, major level of support here. That is a very strong candle. And it's engulfing this dominant bearish candle. So that means that the volume on that had to be even more significant to be able to do that. Let's see how it closes. 35 seconds. Let me see. Let's look at the patterns here. All right, when price came outside the Keltner, especially when it bounces off that 200, it's just so significant. I'm gonna be real with y'all. I'm tempted to get into this buy. I'm not in anything right now, but I'm tempted to get into this buy. Right, we're seeing significant moves when price came outside of the Keltner off of this area here. And when price gets off of that 200, it just takes off. Look at this move here. This is incredible. Right here by the 200. Look at this bounce all the way to the upside here. We're right back here at the 200. All right, so let's see what what these candles are doing here on the 1 minute. Let's see what the candles are doing here. You got 30 seconds left on this candle here. What I don't want is to enter prematurely. But I am seeing opportunity here. Seeing a lot of opportunity. 15 seconds, guys. 15 seconds. Not bad. I want to see price to break past here if I am going to consider getting into that buy. So I'm going to get my buy ready. So I'm clicking on my calculator here. I have buy, I have stop loss, and I have take profit. Okay, so when I'm looking at my stop loss, I can tell you right now the take profit is going to be up here. But when I look at my stop loss, I'm going to go to the 5 minute here. Let me move this out the way because that is in the way. All right, my 5 minute, and then my stop loss is right here under this move right here. Yep. So let me go to the 1 minute. I think I'm going to be seeing what I would like to see. Let's see. If it breaks past this little 200 on the 1 minute, I'm going to get into a buy, guys. And then, let me see. My risk right here, let me see. I think I need this calculator to update based on where we are. That can't be right. So I need this. Hold on. Let me put it down and then put it back up. Buy 186,282. Let me see here. Yeah, my calculator is not functioning correctly right now. It's all good. I normally risk about 0.4. There we go. Now we caught up. Okay. 0.4. 0.04. But I actually might risk a little bit more. Let me see. 0.06. All right, here we go. So if this candle passes this area right here, guys, I'm going to get into a buy. Let's see what happens. I think 0.06 is my cap right there. Let's see what we get here, guys. We got 20 seconds left on this candle. 20 seconds left. Let's see if we can break through. I'm looking for a breakthrough right here. Let's see if we can continue to break through. We're just kind of straggling right now in this area here. Let's see. If you are online, you should be able to see my levels of where I am. Well, I'm going to potentially be. Just say that. Calculator is not updating for me. It's a little laggy today. I'm going to stay at 0.07. That might even be too much, but I'm... All right, here we go. Let's see. If this is our candle here. Might be. I'm liking what I'm seeing. All right, I'm in a buy. I'm in a buy, guys. I'm in a buy. I am in a buy. All right, let's see how this thing plays out. Take profit is actually, I'm going to extend this take profit here because we're getting some significant feedback here. But the first take profit is 23,282, guys. That's the first take profit. The second take profit is 23,327. Okay? So I'll put that on the chart so you guys can see. TP1. Let me put that here so you guys can see it. Hold on, let me get my little line. TP1 is right here. See if I can put some text on here. See if you guys can see. Yeah. Hold on. Take profit 1. Actually, I'll just type the numbers in the chat, guys. So that'll be easier. Let's just do that. So take profit 1 is 23,000. Hold on, let me get my crosshair. 23,283. 23,283. And then take profit 2 is 23,327. Okay, so those are our two levels right there. All right, y'all. So we have our levels. We're in before the news happens, so that's good. We're not like right when news happens. So let's just continue to monitor our trades. All right, great session. If you're in the chat, let me know how you did, on your trade, if you took profit or whatever. And we're going to keep this thing building. So we'll be back on same time next week, Tuesday, 8:45 Eastern Standard Time. And let's keep going. Let's keep it going. So the trade is moving definitely in our way, in our favor right now. So great job, everybody, with that. Looks like our first take profit is about to be hit here. 23,283. Almost there. Yep, almost there. So great job, everybody. Keep pushing forward. Let's keep this thing moving, and I'll catch you guys on the next one. Make sure you like, subscribe, hit the bell notification, and I'll catch you on the next one. Peace. Enjoy.